Shares of Tesla are trading at 109. Tesla shares fell for a seventh straight trading day on Tuesday, December 27. Is it a buy or a sell at the current price of 109? And what's the outlook for 2023? I currently don't own a position in Tesla. In the future, I may open a position whether it's long or short. Welcome to Take It Easy Trading, your channel to get some stock market and macroeconomic review, stock and index chart analysis, and weekly earnings review and trading tips. If you find value in my videos, please subscribe, like, and share. Click the bell icon to get notified of new videos, and thanks for your support. Let's roll. Topics in this video. Let's look at the Tesla's crash, fundamental analysis, fair price based on the forward PE. We'll do some chart and chart analysis. I'll also share some option strategies to go long or short. And let's go. Tesla closed on Tuesday at 109.10. We had a daily high of 119, and previous close on Friday was 123.15 cents. And in the last 5 trading days, Tesla stock is down 27%. Why did Tesla drop 11% today? We had news on Monday. Wall Street Journal reported that Tesla will suspend for an 8th day its production at its Shanghai electric plant. And then China's Global Times reported sort of denial from Tesla, calling the reports for inaccurate, while at the same time they were confirming that they are just doing annual maintenance work. What's really going on in China? Well, the economy is reopening as the government is rolling back zero COVID policy, while the supply chain issues lingering again. And also we have the debacle of Tesla and Twitter, Elon Musk buying Twitter in April, and Tesla shares have plunged 70% since. Musk also announced that he will step down as Twitter CEO once a replacement is found. While this is a good news, the process of finding a new CEO takes time. Also, this is not the only problem that Tesla stock has. Let's look at the stock performance of Tesla in the last 1 month. It is down 45%, and in last 3 months down 62%, and last 52 weeks, 1 year, it is down 72.91%. Is the downward spiral completed, or do we still have more room to go? While the stock is still down 70%, for the 3 years, it's still up 329%, and for the 5 years, it's up almost 493%. And 1 year ago, Tesla had a high of 414, at which point it had 1.3 trillion market cap. And now the market cap is 345 billion. So that's roughly $1 trillion value lost in the market cap. You know how many zeros are in 1 trillion? Let's see. A million has 6 zeros, billion has 9 zeros, and a trillion has 12 zeros. So that's 1 trillion value. And that is a combined value of the whole legacy car industry and more. And now let's look at the Tesla and other EV and auto stocks. GM is down 41% in 52 weeks. Ford is down 46%. And Nikola is down 77%. And Rivian is down 83%. And Lucid is down 83%. While Harley Davidson, for some reason, is up 12% in the 1 year. Have to go and check it out. Now let's look at some Tesla fundamentals. So this is updated last Friday. So the market cap, it says 388 billion. It fell 12% on Tuesday. So that's roughly about 345 to 350 billion as of now. And the PE is 38. That's the PE for this year. And the next earnings is coming out on January 25th. And these are the earning estimates. So for the current quarter ending in December 2022, analysts are expecting a $1.33 to a low estimate of $0.82, and the average is $1.07. So that's still 57% growth rate year over year. Whereas in the next quarter, they're expecting only $1.12, and which is a 17% growth. So we know the growth is coming down. We know there's more supply chain issues. Now the Shanghai factory is shut down for 8 straight days. So these estimates have to come down for the current quarter. And for the full fiscal year next year, 2023, the expectations are for the growth rate of 32.96%, and which still has to come down for next year based on the supply chain issues. Now let's look at the Tesla analyst ratings. Surprisingly, there is no update in the last 3 months. So 3 months ago, we had 3.80 as the moderate buy, and even today, it's still 3.80. It's very surprising that analysts have totally abandoned the investors. We only see two strong sells and about 12 strong buys and two moderate buys and nine holds. Why are the analysts not updating their estimates, and why are they not even lowering their current ratings based on the stock performance? Are they all on leave, or what's happening here? Let's look at Tesla, GM, and Ford. I know Tesla is not in the same bucket as GM and Ford, but for comparison's sake, we have to take a look at it. So Tesla, the performance last 3 months is down 61%, whereas GM and Ford are down 4% and 5.96% for the last 3 months. So is this story of supply chain is only affecting Tesla? Now let's look at some key statistics among these three. We have annual sales of 53 billion for Tesla, GM has 127 billion, and Ford has 136 billion. And the PE ratios are 38 and GM at 4.91 and Ford at 6.98. I'm not saying that the PE has to match that of GM or Ford, but there has to be some normalcy, as Tesla has shown that they are also slowing down their growth. And Tesla has been very dominant since 2010. So in the last 3 years, they have sold roughly 70% of the EV market, and other competition is catching up very, very fast. And in the last year alone, Tesla has accounted for 14% of all EV vehicles globally and 70% in the US market. But the market share in the US market is coming down. And there's also a Tesla fatigue among the owners, and people want to buy a different vehicle other than Tesla. Now let's look at the growth and the PE ratios for Tesla. In the last 5 years, Tesla has grown the revenue 668%, while the stock has also rallied close to 493%. This is including the 70% drop we had in 1 year. So is there a room to go down more? You bet you, absolutely. And also, are electric vehicles a luxury item? So if you look at these, the luxury cars average about 74,000, whereas the electric vehicles average about 66,000. And Tesla is also part of the consumer discretionary sector. And what are typical consumer discretionary stocks? You have your typical retailers, automobile and the automobile manufacturing components, household durable goods, hotels, restaurants, and leisures. So, for example, retailers like Walmart, Costco, Louis Vuitton, and of course, all the automobiles, household durable goods, and for hotels, you have casinos and your restaurants and the cruises. They are all discretionary. That means consumers, when they feel good, when they have an income that can support that kind of spending, they go and spend on those items. These are not non-essential. So when the consumers go back to spending only what they need, then they go back to the consumer staples companies, and those are the ones who are gaining those consumer confidence and the consumer prices with their products. So in an expanding economy, consumer discretionary stocks, they benefit a lot because of they are cyclical stocks and directly dependent on economy and the consumer confidence. And during those good times, consumers are ready to spend on whatever they want to buy. And also, most of these companies have a very good brand value and affinity towards their brands. So people love those brands when they have more money to spend. And now, what happens in a contracting economy or in a bear market? These companies, they suffer because the economy slows and consumer hold back on making discretionary purchases and impacting the share values of these companies. And also, they are very, very price sensitive products. They have to cut down the pricing when the going gets tough, and they are very much into supply chain disruptions in the bear market, and also they're dependent on inflation. So these stocks are very sensitive to raising inflation. So the consumers choose not to purchase these products and substitute them with less expensive versions. So Tesla also went IPO in June 2010. So it has never seen a bear market. So the last bear market we had was financial crisis in 2008 and also the dot-com bust in 2000s. So this is the very first bear market that Tesla is seeing since going IPO. So let's look at some Tesla ratios. Though, as we said, the pre is currently 38 and the forward PE is 35. So this is as of the closing price on Friday. Since the price went down another 11%, I would put the current adjusted PE forward at 35 to 30. So let's use 30 to make our calculations. So at PE forward PE 30, so forward PE is PE for the next year. The current price is 108, and if the PE were to be 25, the price has to drop to 90, and the PE was to be 20, then the price has to be around 72. And do remember, the Tesla price has been going down since last 1 month, almost 40%, and the earnings are yet to be revised down. No analysts have reduced their earnings yet. So in the PE formula, both earnings are going down and the price is going down. So the current multiples are way higher for a bear market. So in a typical bear market, we will see the PEs shrinking down to less than 20, and ideally, depending on the growth story of the company, the 17 is a good number to jump in. So with the forward PE at 17 for a typical bear market, the current price is around $61 to support a forward PE of 17 for Tesla. So that is my fundamentals analysis just based on the PE and the price, where a typical bear market target for the Tesla price is going to be. Is it going to 61? I don't know. Is it going to 100? I don't know. So it all depends on the growth story and how soon the supply chain issues resolve and how soon Tesla can deliver more products. And also, if you were to look, the typical PEG, the price to earnings to growth, is roughly around 1 for a typically well growing uh, a company that's earning very well. So currently it's standing at 1.11, and if it were to go down less than 1, so the price has to come down definitely below $100. So we'll have to wait and see what will be the final bear market target in 2023 or in 2024 whenever it happens for Tesla. Now let's look at some technical analysis using the chart. This is the 4-hour chart of Tesla. It's definitely in the bear phase. The price is below all the moving averages. I have defined a channel since the price in September 300 to current price. It's kind of within the channel, and there is yet to catch up to the downward side of the channel. And looking at the momentum oscillator, it's definitely oversold, but we have more room to grow. For example, if you see in October, we kind of had the black line going down and then moving up, where we got a uh, rally of almost 20% from 198 to 237. So there is still some more time for the black line to curve down and slope upwards, whereas stochastic RSI definitely says it's oversold. We may see a bounce or we may not see a bounce depending on how negative the outlook is. So in this chart, I have marked up all the gap ups we had in the year 2022. It's in those green rectangles. Let's look at those gaps. So we had a gap in, let's say, around 132 through 140, and it broke through that gap. And then we also have a gap around 109 to 110. It was from September 9, 2020. So 110 to 113.84. We filled that gap today. And then there's another gap from August 13, around 103.65 to 104, and that may find a intermediate bottom around there. If not, we have another bigger gap set up on August 11, 2020. It's at 91.63 to 95. So I would say if we were to go down and fill that gap around 91.63, 92 around, so that may be a very good short-term bottom for us to bounce up towards 133 to 140. And this is the weekly chart of Tesla. So I have further some more gap ups from, let's say, that's one more around 88, and that also kind of coincides with the fib levels 88.74. And you can see the weekly momentum is also sloping down, and we are at very oversold conditions on the weekly chart as well. On the hourly chart, I do see the stochastic RSI kind of showing some divergence as the price has hit new low and the stochastics hasn't hit a new low. So if this was to find another low below Tuesdays, and if we maintain the divergence, we may be able to get a bounce out of this at least to the 50 period moving average around 135. Now let's look at some of the option strategies that we can use for Tesla, either long or short positions, depending on where we want to go. The current IV is extremely high. For December is 130% and expected move is $10 up or down. And for January 6th, the expected move is $17 and the implied volatility is 122. So let's look at some of these. So $100, the call options are trading at 13.50 cents. So to break even, you have the price has to get over 113, and 110 options are trading call options are trading at $7.60, whereas the put options are trading around roughly 8 to 8.50. So you could do a couple of things. If you think you're convinced that the current price is the bottom price, roughly around 108, then you can either do a spread. You buy 110 and probably you sell 120, or you can buy 100 and sell 120, so that way you don't get affected by the implied volatility. If we go further down, let's say 20th Jan, so the implied volatility is 105 and the expected move is 24, and we also have earnings. I think it's after in here, 27th Jan is when we have the earnings. The 23rd Jan will fall into this week. So roughly $100 call options are trading around $117. So for you to break even, Tesla has to close above 117 by 27th Jan, and the put options are trading around 815, and for you to break even, Tesla has to close roughly around below 92 on these options. So these options are very, very expensive. So if you are new to the options, don't even bother looking at them. If you want, you can outright buy the stock and probably sell 110, so which would be $12, 110 calls. So if the price goes to 122, you make the money $12. If the price drops, let's say to $100, and since you sold around 12, so your break even price would be $98. So that might be a better option if you want to go long with the current price. All right, that's all I have in this video. Please share your comments about what you think about this video, and like, subscribe, and share with your friends. Thanks.